I'm gonna give you 7 reasons which will prove to you that SCHD is and will remain the best dividend ETF of all. So if you are a dividend investor and you're always looking for the best investment opportunities, after watching this video you'll have all the necessary information to make a good decision. You all probably know SCHD, the Schwab U.S. Dividend Equity ETF. So I'll go directly to the 7 reasons, and even if you don't know this ETF, you'll get a good overview here. So let's start. The first reason is that in the long term, SCHD has had superior returns to all other dividend ETFs. Check out this graph that shows you the 10-year return of the 10 most important dividend ETFs around. I tried to choose the 10 best, of course, but if there is another dividend ETF with a great long-term return, let me know in the comment section below. The 10 dividend ETFs here are SCHD, the Schwab U.S. Dividend Equity ETF, VYM, the Vanguard High Dividend Yield ETF, VIG, the Vanguard Dividend Appreciation ETF, SDY, the SPDR S&P Dividend ETF, HDV, the iShares Core High Dividend ETF, SPHD, the Invesco S&P 500 High Dividend Low Volatility ETF, NOBL, the ProShares S&P 500 Dividend Aristocrats ETF, DVY, the iShares Select Dividend ETF, DGRO, the iShares Core Dividend Growth ETF, and SPYD, the SPDR Portfolio S&P 500 High Dividend ETF. Alright, it was a long list, but at least with this video you also got the list of the 10 best dividend ETFs around. So, 2 videos in one. Anyway, let me fade in the dividend yield of these 10 ETFs and also the long-term return. I can show you 10 years of returns here when taking all these 10 ETFs because some of them are too young for it. But we have around 8 years here, so it's okay. You can see right away that SCHD has had the greatest return in the long term, with 146%. The only 2 other ETFs that get close to this value are DGRO, the iShares Core Dividend Growth ETF, and VIG, the Vanguard Dividend Appreciation ETF. But they both have a much lower dividend yield than SCHD with 2.32% and 1.88%. Now remember, these are the main dividend ETFs per returns, assets under management, and stability. Sure, you can throw at me a JP with a 10% dividend yield, but we're talking about ETFs which, 1, are not going to be able to keep such a high dividend yield for the long term, and 2, are not going to give you the same overall return in the long term. Reason number 6, SCHD is in a better position than the S&P 500 now. Because of all the hype for AI, among other reasons, everybody was so optimistic in the market lately, and the technology sector grew over 50% since the beginning of the year. And this of course dragged up the S&P 500 with it, which is a strong overweight in tech with around 28%. And now everybody's happy, of course, because we recovered from the losses of last year. But what about SCHD? Well, tech exposure here is just 12.5%. And that's why SCHD actually underperformed the S&P 500 by a long shot since January. The S&P 500 grew 19.72% and SCHD only 1.38%. So now some of you might say, come on, this is a clear sign that SCHD is a weak choice. Well, I tend to disagree with this because when you have a hype like the one that we've had this year with the tech sector and AI, you may actually think that it's better to focus on investing on something which is not actually overpriced, but still has a wonderful track record, like, well, SCHD. In a market trading at 20 times forward earnings, with tech stocks trading at almost 30x, you can buy SCHD for less than 14x, which is a great discount if you ask me. Before moving to number 5, guys, in case you haven't done it already, be nice and give a beautiful like to this video. I know you might think, who is this guy and why does he want me to click the damn like? But it's actually so useful for me and for my channel, so thank you so much, guys, you're amazing. Reason number 5 is a superior dividend growth. SCHD increased its dividend constantly since inception, as you can see in this trailing 12 months dividend chart. And the dividend growth year over year was also positive almost every year. If you are a serious dividend investor, having a constant and secure dividend distribution in your portfolio is one of the most important factors, because you don't want to get $1,000 this year and maybe $500 next year, or maybe nothing. You want to be able to plan what your passive income is going to be in the future, and some of you are even close to retirement. So it's even more important in this case to know that the dividend income that you're going to receive is going to be stable and guaranteed over time. Now, this chart here shows a comparison of dividend growth between SCHD and VYM, which is by far one of the most established dividend ETFs. You can see that in the last 10 years, SCHD increased their dividends by 446%, while VYM only 133.8%. Reason number 4, great portfolio screening strategy. SCHD has, in my opinion, one of the finest ways to select stocks. And this, of course, results in better performance, better stability, and better dividend yield. If you compare the sector composition of SCHD with the one of VYM, for example, what I like more about SCHD is that it gives more weight to sectors like healthcare and, above all, technology. while scaling down other sectors like financials that instead have a strong weight in VYM. For the sector composition, but also for the choice of stocks, we have to thank the way SCHD selects the stocks, or better said, the way the underlying index selects the stocks. Some indexes just select stocks based on dividend yield and historical growth, some just based on market capitalization, but not SCHD. SCHD tracks the Dow Jones U.S. Dividend 100 Index and selects 100 U.S. securities excluding REITs. All the stocks are first screened using 3 criteria. They need to have minimum 10 consecutive years of dividend payments, minimum 500 million float-adjusted market capitalization, and minimum 2 million of 3-month average daily trading volume. All the stocks that match these requirements are then ranked by dividend yield. This is the reason why, for example, mega cap tech companies like Apple or Microsoft never qualify for this ETF. And also the reason why this friend of ours gives you such a nice dividend yield every year. Then the final decision of which stocks will be finally selected happens based on 4 factors: the average dividend growth over the past 5 years, the free cash flow to total debt, the return on equity, and the expected forward yield. Moreover, the weight of the single positions and sectors is kept to avoid an overweight. As you can see, a strong focus on important financial metrics, as well as dividend stability and growth. Reason number 3, the current yield. Let me show you again the current yield of the 10 ETFs that I've shown you before. Of course, there are other dividend ETFs that have a higher dividend yield, but if you consider these together with the assets under management, the history of growing dividends, and the return, SCHD is unbeatable. Here you see the 5 biggest dividend ETFs in the world per total assets under management. And there are 5 of the 10 ETFs that I mentioned at the beginning of the video. Well, if you compare the current dividend yield of these 5 ETFs, SCHD is by far the highest. Take for example VYM, which after SCHD has the highest dividend yield in the top 5. We're still talking about 3.04% against 3.46% of SCHD. It might not sound like a lot to you, but it's actually pretty meaningful. With $100,000 portfolio, SCHD investors will get around $3,500, whereas VYM investors only $3,000. The difference, which might not sound like a lot when talking about small sums, is actually around 15%. And a 15% boost to annual passive income is not bad. When combined with the fact that SCHD grew its dividends at a 7.1% rate over the past 12 months and a 12.3% CAGR over the past 3 years, compared to VYM growing its dividends at a 4.3% rate over the past 12 months and a 4.1% CAGR over the past 3 years, SCHD is clearly a superior choice. Reason number 2 might sound trivial, but Morningstar loves it. In fact, SCHD is gold rated in Morningstar, besides having 5 stars. Now, if stars and metal colors don't make sense to you, let me explain. The star rating tells you how the ETF performed historically versus its peers. And 5 stars basically tells you it's the king against its peers.
I am the king!
And the gold, silver, bronze or neutral rating is based on whether Morningstar's analysts think it will likely keep outperforming in the long term, which again is useful information. But let's take a step back now. Why is Morningstar's opinion so important? I'm usually not the one that judges an ETF because of some online rating companies, but Morningstar is by far one of the most trusted and reliable investment research firms around. So do I like SCHD only because Morningstar loves it? No. But hey, it's a hell of a confirmation. And if you think that getting a 5 stars rating in Morningstar is a piece of cake, well, consider that all the other 9 dividend ETFs that I mentioned in this video have 4 stars, 3 stars, some even 2 stars. So what do you want more? Well, if you do want more from Morningstar, let's talk about consensus. SCHD's future expected returns are superior to almost any investment strategy or popular ETF. It's higher than the Nasdaq itself, REITs, dividend champions and aristocrats, even the S&P 500 itself. And historical returns of 13% over 10 years confirm that such return potential is actually reasonable. Alright, reason number 1 is a superior distribution of the holdings. SCHD's portfolio has 104 holdings and 40% of it is invested in its top 10 holdings. This can be seen as a disadvantage because other ETFs are more diversified with 500 or 600 stocks. And that's true, but it's also true that like this, SCHD focuses more on overperforming stocks and doesn't waste much capital in underperforming holdings. I'm gonna leave this for you to judge, but I just want to show you that SCHD caps that portfolio weight of its companies to around 4%. And this is, in my opinion, a good way to ensure that your portfolio is not gonna sunk down by some trading jokes like AMC Entertainment or Tupperware, which, by the way, come on. why are we doing this? Anyway, the distribution is great in SCHD. You get exposure to almost every sector of the economy, and you get exposure to 50% wide moat, which is a term used by Warren Buffett to describe companies with a strong competitive advantage. If you like SCHD, you absolutely need to take a look at this, which will tell you everything about SCHD, how much money you'll make with it, and also what happened in the last reconstitution. And this, which is a comparison analysis between SCHD and VYM, which will tell you everything you need to know when you compare SCHD to other dividend ETFs. I'm gonna make the videos appear here, so you can click on them. And of course, subscribe to my channel if you wanna be a great investor, because we're building a community here, and I'm gonna do my best to give you new interesting content every week. Thank you so much for watching this video, guys. I wish you a great day or evening, and as always, I'll see you in the next video.